We'll start with question number 14. Okay. Following are the balance sheets of S Limited and K Limited. Okay. Share capital is given 1,50,000, 1,20,000 reserves. Secured loans, current liabilities, creditors are given. Fixed assets, current assets, creditors. Okay. Bank. They agree to absorb K Limited on the above. The following terms are given. Look at the first one. S Limited agree to repay which one? 10% of K immediately. Then yes will revalue fixed assets at 1,95,000 to be incorporated in what? Books. Okay. Shares of both the companies to be valued on what? Net asset basis. See, valuing the shares based on net assets, we call it as intrinsic value. Intrinsic value is nothing but net assets available for equity shareholders divided by number of equity shares. Please note. Intrinsic value is equal to net assets available to equity shareholders. Intrinsic means net assets, or net asset value is nothing but net assets available for equity shareholders divided by number of equity shares. Net assets available to equity shareholders divided by number of equity shares. Goodwill, they ask you to take Kailash Limited's goodwill. The cost of absorption, how much? 3,000 to be borne by what? Sadasiva Limited. Calculate ratio of exchange of shares, journal entries, bank accounts, then prepare balance sheet after the above arrangement. So before we start solving or whatever, try to work out net assets value. Assets minus which one? Liabilities will give us net assets value. Take both the company's assets at revised value. You work out in columnar format. S and K like that, have a column. Work out assets minus liabilities, you will get net assets for both the company. Try to work out net assets for both the company. What are the revised value of assets given to us? Goodwill, they ask you to consider for which company? Kailash Limited. Let us work out. Goodwill of Kailash, how much? 50,000. Other assets, what are the other assets? Fixed assets value is given only for S. So let us take only for S, 1,95,000. Other company, the same book value. I hope all other assets are book value, right? Stock, debtors, bank balance, you can take it. Minus external liability. Please remember, debenture will be paid in the future. Debenture will be taken over by the purchasing company and that will be settled by the purchasing company in the future. Not now. So debentures of Kailash, creditors, net assets you will get. So assets minus liabilities will give us which one? Net assets. How many shares are there in Sadasiva and Kailash? Share capital of 10 each, Elia. So 15,000 shares and what? 12,000 shares. So number of shares are 15,000 and 20,000. Net assets divided by number of equity shares, we call it as which one? Intrinsic value. Net asset value per share, we call it as which value? Intrinsic value. Net assets are 3 lakhs and which one? 1,80,000. That divided by number of shares gives us which value? Intrinsic value. Any doubt in calculating net assets? Now, who's taking over which company?
Yes.
Okay. S is purchasing K. Wait. Now how to determine ratio of exchange? Ratio of exchange. One logical way, another one is a formula method. Logical way is always better to remember. Okay, what is the value of S? 20. What is the value of K? So let us take LCM, common multiplier. 60 varma. Can we take it as 60? 60. So it is like 3 shares of Sadasiva will be like 3 into 20. It will be like how much? 60. It is equal to what? 4 shares of K. That is nothing but 4 into 15, 60. Can you say? Can you agree with this? 3 shares of S is equal to which one? 4 shares of K by taking the LCM, right? So we can say, wait. How many shares are equal to how many shares? 3 shares of S is equal to 4 shares of K. So which company we are going to acquire? K we are going to acquire. So for every 4 shares in K, how many shares will be allotted?
3 shares.
3 shares in S will be allotted. So exchange ratio. Ratio is nothing but 3 by 4. 3 by 4. How much? 0.75. Exchange ratio is 3 by 4. 0.75. Pay attention. 2-3 minutes and you can copy. Pay attention. So number of shares allotted will be how many shares are there in Kailash? How many shares are there in Kailash? 12,000 into 0.75. Or you can say 12,000 into 3 shares for every 4 shares held. How many shares will be allotted? 9,000 shares in which will be allotted? Yes will be allotted. Yes will be allotted. You understand? We can verify. How many shares are allotted? 9,000 shares in S is given to K. So, what is the value of 9,000 shares? 9,000 into 20. How much you get? Yes, 1,80,000. We get which one? 1,80,000. Yes. That is the value of K. That is the value of which one? K. Or this is a normal logical method. How to work out exchange ratio? That is a shortcut method. This you will learn at the final level. Value of target divided by value of acquirer. Value of target divided by value of acquirer. Which one you are targeting? That is selling company divided by value of acquirer. What is the value of target? Target. Selling company. No. Per share value. 15 divided by what is the value of acquirer? 20 will give us 0.7. Value of acquirer divided by value of target. Sorry, value of target divided by value of acquirer. What does it mean? What do you mean by target? Selling company. What do you mean by acquirer? The purchasing company. Simple. Your shares are 15 rupees. My shares are 20 rupees means 15 by 20. I will exchange 0.75. I will exchange what? 0.75. This is a shortcut model, but logical model is always better. You will learn a concept called mergers and acquisitions in SFM, Strategic Financial Management. There you will use all these value of target by value of acquirer, all those things. So once again I repeat, 3 shares of S is equal to 60, which is equal to 4 shares of K. So we can say for every 4 shares of K, how many shares will be allotted? 3 shares will be allotted. So exchange ratio is 3 for every 4, 0.75. Number of shares to be allotted is equal to 12,000 into 0.75 you can call, or 12,000 into what? 3 for every 4 shares held. So that will give us 9,000 shares of S. How to verify this? 9,000 shares of S is given to K. The value of 9,000 share is 9,000 into 20, 1,80,000. That is nothing but the net worth. So simple to work out exchange ratio. How to work out exchange ratio? Value of target divided by value of acquirer. 15 by 20, which is nothing but 0.7. Actually, I think பண்ணவே தேவையில்லை. Okay, ரொம்ப simple. Which one we are purchasing? Kailash. எவ்வளோ? What is the value of Kailash? 1,80,000 divided by which share is going to be allotted? Who is going to allot the shares? Yes is going to allot the shares. What is the value of S? 20. போட்டு பாருங்க. 9,000 shares வந்துட்டு. I am going to acquire you. What is your value? Net assets value? 1,80,000 divided by I am going to allot my shares. What is the value of my share? 20. So 1,80,000 per share value of mine is 20. Now how many shares I should allot? 9,000 shares I should allot. This is an alternative approach. But what is the correct answer for this question is, what is the first question they ask for? Calculate ratio of exchange கேட்டிருக்காங்க, and this answer is definitely required. Exchange ratio is 0.75. Yes, this answer will be definitely expected in the exam. Any doubt in intrinsic value now? It is an extension of which method? Net assets method. Net assets divided by number of equity shares gives us which one? Intrinsic value. Value of target here means market price of target divided by market price of acquirer, or net assets value of target by net assets value of acquirer. So these alternative answers are only for your logical understanding, which you may use it in future. But this is the best way. Now, is it amalgamation in the nature of merger or purchase? Purchase. Why? Goodwill is revalued, then fixed assets values are changed. So, amalgamation in the nature of purchase. Start. After taking up this, in the books of which company? Yes Limited. In the books of Sadashiva Limited, amalgamation in the nature of purchase. See, intrinsic value is otherwise known as liquidating value. The simple, if the company is closed today, if the company is liquidated today, how much each shareholder will get? Simple, this is the realizable value of asset minus these are the liabilities payable to outsiders. That divided by number of shares, each shareholder will get how much? 20 and 15. So, it's called as liquidation approach. Start. In the books of Yes Limited, amalgamation in the nature of purchase. Start with the first entry. What is the first entry? Business purchase upon data to liquidator of K Limited. Before that, look at the Sadashiva's revalued fixed assets. How much? 1,95,000 to be incorporated in the books. Okay, that we can pass it as a separate entry also. They want to revalue the assets and incorporate in what? Books. That we will come to that later. No issues. Let us continue with normal 3 entries and let us come back to that later. Start.
The cost of absorption from the preliminary expenses account is written.
Yes, cost of absorption it is given, so we can record it as preliminary expenses. In some textbooks they adjusted with goodwill. In some textbooks they have adjusted with what? Goodwill. That is an alternative approach. If they tell that it is a liquidation expense of selling company borne by the purchasing company, we can debit to which account? Goodwill account. So first entry, business purchase account data to liquidator of Kailash, how much? 1,80,000. Then debit the assets at revised value. Credit the liabilities. Of course, goodwill is not a balancing figure. It's not a balancing figure. Goodwill is valued, right? 50,000. So while settling the purchase consideration, be careful. How many shares we are allotting? 9,000 shares into 10. Face value. Remaining will go to what? Premium. So to equity share capital will be 9,000 into 10, 90,000. Securities premium, that extra 10 rupees. That we will settle. We will settle the debenture holders separately. Separate entry postponement. It's given after taking over the business, we are going to pay off this 10% debentures. A separate entry will come. Any doubt in this? Assets and liabilities taken over? Revised value to creditors and debentures to business purchase. Liquidators of the other company account debt are to capital to premium. You have to pay off the debenture holders, Elia. How much you have to pay? 20,000. Pass entry. This 10% debentures is settled, given in the problem specifically. Yeah, just a redemption entry. You pay the liability. Liability accounted to bank. Liability accounted to bank. Then that one amalgamation expense also you can record. Amalgamation expense accounted out to bank or preliminary expense accounted out to bank. Not over. One of the most important thing, point number 2. How to record the upward revaluation of fixed asset. Our fixed assets are 1,40,000. It is revalued at 1,95,000. Maybe you have learnt AS10, plant, property and equipment. When there is an upward revaluation, what you used to do? Was it covered in first group? Accounting standard, covered in first group. Plant, property and equipment. If there is an upward revaluation, what to do? Okay, no issues. It will be transferred to revaluation reserve. It will be transferred to which account? Revaluation reserve account. Increase in the value of asset cannot be transferred to P&L account because it's not a realized gain. Unrealized gains, it will be recorded in what? Revaluation reserve. When you come to final level, you will be learning some other thing. There is no more revaluation reserve now. It is called as OCI, other comprehensive income as per Ind AS. Let me not confuse you talking about that. Okay, so as of now, for inter exam revaluation reserve. What is the entry will pass?
Fixed asset.
Fixed assets accounted after revaluation reserve. Fixed assets accounted after which account? Revaluation reserve account to record the upward revaluation of fixed assets.
ಇಲ್ಲ revaluation account. Profit.
Start doing the balance sheet next. Prepare the balance sheet next. The examination you require a separate working note, but for classroom purpose it is okay. When you do the working notes along with the balance sheet, okay. Equity and liabilities, shareholders funds, share capital. What is a purchasing company share capital?
150,000.
Plus face value of shares allotted. 90,000. Only the face value you should consider. How much? Resource and surplus. Purchasing company. Sakadeva. How much is there? Plus securities premium. Plus revaluation reserve. 55,000 minus preliminary expenses.
2,37,000.
Preliminary expense how much?
3,000.
Okay. Purchasing company's reserves plus securities premium as per entry number 3. Revaluation reserve minus preliminary expenses. What is the net amount?
2,37,000.
Non-current liability irka? Oh, debentures are paid. Current liability, yes, you can add S plus K. How much?
79,000.
Fixed assets you have to consider with the revalued amounts. Yes, 1,95,000 plus K how much? 75,000 with revaluations. How much? Goodwill as per the entry. Current assets, S plus K you can add. $80? Trade receivables also, S and K you can add. Cash and cash equivalents, S plus K. Tell me the balance first. 90,000 minus debentures are repaid minus expenses, preliminary expenses.
3,000.
It is not a liquidation expense of selling company borne by purchasing company, but in some textbooks they have taken alternative treatment. This preliminary expense was treated as which one? Goodwill also.
Sir, can you show the working balance sheet?
Ah.
Sure.
In the exam, ensure that these workings are shown separately, not as part of balance sheet. Shall we proceed? Go to the question number 15. Gauri and Ambika Limited, the following balance sheet is given to us. Okay. They amalgamated with, okay, Gauri Limited is amalgamated with Ambika Limited on the above date. For the purpose of amalgamation, goodwill of Gauri Limited is considered valueless. Arrears of depreciation amounting to how much? Nothing but they ask you to alter the value of assets. Shareholders of Gauri Limited allotted in satisfaction of their claim shares in Ambika Limited in the same proportion of which one? Intrinsic value of shares of both the company bear one another. Pass journal entries in the books of both the companies and give the effect of the above. Simple. What do they ask you? Work out net assets, same like last problem. Work out which value? Intrinsic value, then decide ratio of exchange, allot the shares. Start. So work out first net assets. First step answer is net assets. For that, you take around 4-5 minutes of time. Start. Net assets. Computation of net assets. Provision for tax also current liability one. Yes, liability. It's part of liability. Proposed dividend provision for tax we showed under what? Current liabilities and provisions, that short-term provisions. Enhance appeal. Intrinsic value. How much you get? For purchasing company, what is the intrinsic value? 180. Selling company? 22.5. Let us verify. Fixed assets of Gauri 83 lakhs minus 4 lakhs. Ambika, take the book value. Current assets no change. Investments also no change. Goodwill is considered valueless. Goodwill is considered what? Valueless. Less all external liabilities. That includes non-current liability, current liabilities and provisions also. Unsecured loan, secured loan, creditors, provision for tax, and which one? Proposed dividend. So assets minus liabilities will give us net assets. That divided by number of shares. How many shares are there? This is 100 each. Please remember, first one is 100 each. Which means how many shares? 50,000 shares. The other one is 8 lakh shares. 50,000 and 8 lakhs. This is your intrinsic value.
How many shares? 25 will be 180.
What is intrinsic value? 180 and 22.5. Number of shares we can work out. They don't ask exchange ratio. So 8 lakhs divided by 180, like that you can work out. What is the value of the selling company? Sorry, 1 crore 80 lakhs. What is the value of purchasing company shares? 180. Wait, who's taking over which company?
So Ambika is taking over.
Oh, okay. The second column is purchasing first column.
Yeah.
Correct. So we have to allot how many shares?
4 lakh shares.
Purchase consideration is this 90 lakhs divided by 22.5. You get 4 lakh shares to be allotted. Is it merger or purchase? So, in the books of Ambika Limited, let us start. In the books of Ambika Limited, let us pass journal entry. Gauri is a selling company, okay. Shall we continue? Continue.
Provision for tax is business purchase. Again, intake like assets like
Liabilities will include this unsecured loan, creditors, and which one? Provision for tax also.
So,
Yes, please.
4 lakh, how did you get? How did you,
Who's purchasing whom? Ambika is purchasing Gauri. What is Gauri's value? 90 lakhs divided by Ambika is going to give the shares. So it's like, let us assume you are Ambika and I am Gauri. My net worth is 90 lakhs, your share value is 22.5. 90 lakhs divided by 22.5, it will give me how many shares? 4 lakh shares.
yes, sir, okay.
Start. In the books of amalgamation in the nature of purchase, what is the first entry? How much? 90 lakhs. Huh? Liquidator of Gauri. Next, for the assets and liabilities taken over, to business purchase, I hope it tallies. What is the business purchase? 90 lakhs.
here it is mix of both the companies. Balance sheet development. Both the companies.
What is the next one? To equity share capital will be 4 lakhs into to securities premium 50 lakhs. Balance sheet let us do without a format. Example of format follow பண்ணிக்கங்க. Just to verify your answer. Okay, share capital. What is Ambika's share capital? Existing share capital?
80 lakhs.
80 lakhs plus purchase consideration 40 lakhs. How much? Resource and surplus? Only Ambika's will come. Ambika's resource எவ்வளவு இருக்கு பாருங்க. கேட்கல பட் இருந்தாலும் நம்ம சும்மா போடுறோம். Ambika's general reserve எவ்வளவு இருக்கு? 1 crore. Plus securities premium. So total. Then வேற என்ன இருக்கு liabilitiesல? Long term borrowings. Long term borrowings secured plus unsecured loan. Ambika plus Gauri. How much? Total? Then Ambika plus Gauri. Then provision for tax. Tax plus proposed dividend. Please follow a proper format in the exam. Classroom, it's okay. Share capital, this one, Ambika plus purchase consideration. Assets என்னென்ன இருக்கு? Fixed assets, Ambika, how much is there? 1 crore 60 lakhs plus the other one. 79 lakhs, revised value. Total? Then intangible, goodwill. Oh, goodwill valueless. இப்போ நான் இங்கே டெபிட் பண்ணேன். காப்பி பேஸ்ட். Fixed assets, அப்புறம் current assets.
Investment bonds.
Investments இருக்கா? Investments how much? Current assets total 2 crore?
2 crore 54 lakhs.
Thirty-seven lakhs.
4 lakhs.
செல்லிங் கம்பெனி வேணாம், போர் அடிக்குது. பர்ச்சேசிங் கம்பெனி மட்டுமே கன்டினியூ பண்ணலாம். பர்ச்சேசிங் கம்பெனியே போர் அடிக்கும் இப்போ. Have you taken up?
Proposed dividend current life which is second April எழுதவில்லை.
அது பர்ச்சேசிங் கம்பெனி தானே இருக்கு. ப்ரொபோஸ்ட் ஓடன் இது வந்து அம்பிகா தானே. 10 lakhs is purchasing company's proposed order தான். Second company is the purchasing company. அதனால the confusion, overlook mistake. Ambika is the purchasing. போறாது. புரியல. நெக்ஸ்ட் ப்ராப்ளம்ஸ் ஆர் பிராக்டிஸ் இந்த கிளாஸ் தான். Next problem is a very good sum, not like routines, basic sums. It's a very good problem. Go through that. The last 3-4 problems are monotonous type. Same type la பண்ணதுனால தான் கொஞ்சம் போர் அடிக்குது. Next problem different ஆ இருக்கும். So அந்த போர் adjust ஆயிடும், கரெக்ட் ஆயிடும். We'll see. பார்க்கலாம். Shall we proceed? Okay. Question number 1. Assignment question number 1 we'll do in the class. I'll give you additional problems for you to work out. Don't worry. We'll do some of the problems and I'll tell you which problem you have to work it at home. Assignment question number 1. A Limited and B Limited carrying on a similar business decide to amalgamate and form the new company called. Okay. 100 rupees per share. Balance sheet of A Limited is given to us. Then balance sheet of B Limited is given to us. Okay. Two selling companies. Scheme of valuation is given to us. Once they revalue the assets, it becomes what? Merger or purchase? Purchase. To provide reserve for bad debts, write off 400 from stock, write off 33 1/3 from plant and machinery. To eliminate goodwill and P&L account balance for P Limited, write off bad debts, provide for reserves, write down the plant and machinery at 10%, write down from the value of which one? Stock. You are required to compute which one? Purchase consideration and prepare the balance sheet of which company? AB Limited. So which method for purchase consideration? Net assets method. Net assets method. Let us do it along. Start. Heading amalgamation in the nature of Here they are not giving you in which form the purchase consideration is paid. So we'll assume that it is paid in what? Shares. A limited and which one? B limited. Let us maintain total column also. With that we can prepare balance sheet easily. Assets. Assets in and assets irukku paarunga. Goodwill is for A limited. How much is the goodwill?
5,000.
Do they ask you to eliminate the value of goodwill in it? No. For A limited 5,000. For B limited they ask you to eliminate which one? Goodwill. They ask you to eliminate goodwill. So 0. Then which one next?
Land and land.
Plant and machinery. For A limited, any revalued amount given? Okay, they ask you to write off 1/3 of plant and machinery. For A limited, they ask you to write off what? 1/3 of plant and machinery. 24,000 minus 1/3. How much?
16,000.
B limited.
14,400.
For B limited, look at the adjustment given. 10%. 10%. For plant and machinery, then land and buildings, no revised value given. If it is not given, take the book value. What is the book value of land and buildings? 17,000 and 10,000. Then stock
9,600. 400 to be.
4,400 to be taken off, so 9,600 will be the stock value. Then
Then 6,000.
how much?
6,000.
Then let us ensure that the provision for bad debts is adjusted. For A limited, how much to be adjusted?
5%.
5%. So debtors minus 5% for A. 11,400. Then B. For B, any bad debts to be provided? How much?
1,000.
Your 5% to be provided on debtors. No. 1,000. Bad debts. 1,000. Apart from that, 5% you have to provide.
5,700.
So 7,000 is the bad debt. Sorry, 7,000 is the debtors minus 1,000 plus 6,000 on that 5%. So 5,700. $7,000 minus 1,000, 6,000 on that 5%, 5,700 net balance. Then
Furnitures and fittings. Or bill.
furniture. Let me to bring the furniture up because balance sheet preparation the tangible assets கொண்டு வந்துடலாம். Furniture. How much?
7,500.
No revised value.
No, sir, for bill.
B limited. Furniture. How much they ask you? A limited. B limited.
7,000.
Then which asset next? Cash and bank. Cash and bank balance for A limited.
8,000.
For B limited. Total less liabilities. What are the liabilities? Okay. Creditors, how much for E Limited? 4,000, 8,000. Huh? Then bills payable for A. Then what is the next one? Bank code is there for B. How much? That's all. Net assets equal to purchase consideration can be taken as which one? Share capital. So simple, in asset side all these things will come, in liabilities all these things will come, balance sheet will tally. Balance sheet போடுவானா example போட்டா, I mean this plant and machinery, land and buildings, furniture will be part of which assets? Tangible fixed asset வந்துரும். Goodwill will come under what? Intangible assets. The stock, debtors, bank, cash and bank balance will come under which category? Current assets category, okay. Then of course, current liability. This will come in what? Current liability. So share capital is nothing but purchase consideration. We assume that the purchase consideration is discharged in the form of what? Shares. 100 each. So 9,947 into 100. Balance sheet will be based on the total column you can prepare and show. P&L to be eliminated in கொடுத்திருக்கானே. So net assets என்ன? Assets minus external liabilities. அவன் கொடுக்கலைனாலும் நம்ம eliminate பண்ணிடுவோம். P&L account of B Limited will be eliminated. Even if they are not specifying, we'll ensure that we'll eliminate because it's a loss balance. Otherwise, what do you mean by net assets? Assets at revised value minus what? External liabilities. And now the question further, it appears big, but solution is that's all. And with this working, you can prepare the balance sheet also. Land and machinery, land and building for I mean fixed assets, current assets, intangible assets இருக்கு. Creditors, bills payable, bank OD will come under current liability. The purchase consideration paid will be nothing but what? Your share capital. எவ்வளவு பெரிய கொட்டாவி போட்டாலும் கிளாஸ் இப்போதைக்கு முடியாது. வேணாம் வேண்டாம் ஜெனரல் என்ட்ரி வேணாம். ஜெனரல் என்ட்ரி என்ன பாஸ் பண்ண போறோம்? Business purchase of debtor to liquidator of A Limited and what? B Limited we are going to pass. Then debit the assets, credit the liability to business purchase we will close. Settlement of purchase consideration will be what? Liquidator of which company? A Limited, B Limited to capital. That's all. So no need to pass entry. In the exam கேட்டா பண்ணிக்கலாம். Go to question number 2. Let us not waste time because it's a routine one. It's a routine one. Question number 2 பாருங்க. Because question they ask you to just calculate which one? Purchase consideration and prepare only the balance sheet. They don't ask journal entry. Balance sheet can be prepared with the help of the total column of A plus B. Question number 2, Parag. On 31st March 1999, Thin Limited was absorbed by Thick Limited, later taking over all assets and liabilities at book value. Okay. Consideration for the business is fixed at 4 lakhs. Very good. Lump sum method. It is paid in the form of what? Shares. So from the first 4 lines itself, we can make out it's a merger. It's a merger. They have given authorized share capital. Authorized capital is just an information for us. Doesn't matter. This problem or beauty enna? What is the purchase consideration? Look at the share capital of selling company. Selling company. That's authorized capital. Paid up capital paranga. Selling company or paid up capital, how much is there? Only 2 lakhs is there. So if you look at purchase consideration is 4 lakhs, share capital is 2 lakhs. Do you know that? In merger method, when you pay more purchase consideration, it will get adjusted with what? General reserve. So look at share capital is only 2 lakhs. Purchase consideration is how much? 4 lakhs. But look at the general reserve of the company. Selling company or general reserve, it is there only to the extent of what? 50,000, which means in this problem, when we pass a second journal entry, general reserve will have a debit balance. Why? Because selling company general reserve available is only 50,000. Once again, I repeat. What is the purchase consideration? 4 lakhs. Okay. What is the equity share capital? What is excess consideration? 2 lakhs. In that, how much will get adjusted with general reserve? Remaining 1,50,000. When we pass a second journal entry, it will have which balance? Debit balance. Means. Okay, assets, liabilities are given. Okay, done. Amalgamation expenses to amount to how much? 1,000 to be borne by, of course, purchasing company now. They ask you to prepare selling company book. You will do. You are an expert now. Pass necessary in the books of which company? Thick Limited, and prepare what? Balance sheet. Of course, we'll do that part only. Shall we? Start. Let us start quickly. See, amalgamation is important for 15 marks in your exam. So surely you will get 15. Then internal reconstruction is important for about 10 marks in the exam. Okay. So advanced accounts is comparatively easier. Easier because our mind is tuned for it. It appears easy. Okay. Shall we? Start. நாம் எவ்வளவு சோகமா மூஞ்சி வச்சிருந்தாலும் பாஸ் வந்து 2 ப்ராப்ளம் போட்டு தான் முடிப்போம். Start. Business purchase account debtor. How much? 4 lakhs. To liquidator. Of who's the selling company? Four lakhs. Sundry assets use பண்ணுங்க, no problem. Sundry assets account debtor. Thin Limited total of assets. Book value தானே? Book value 3,11,000. Leave a line gap because general reserve will have a debit now to all external liabilities and reserves. What are the external liabilities? From the end, let us start. Provision for tax. Selling company எவ்வளவு இருக்கு? 5,000. From the end, let us come up. Provision for tax, then staff provident fund. It is an external liability. Staff provident fund is an external liability. How much? 4,000. Then to credit us
30,000
how much? 30,000.
456.
Then
Workman
to workmen compensation fund. Please remember, it is liability or reserve? It is part of reserves and surplus. Please note. Workmen compensation fund is a kind of a contingency fund we maintain. But staff fraud and fit is a statutory thing, obligation that should be paid to the employee. It's a provision or contribution to be deposited with PF authorities. It is your liability. Fund is in its reserves and surplus. It is part of your reserves and surplus. What is workman compensation fund? Please remember merger method. Upper reserves will be automatically maintained. Then what is the next one? Profit and loss account, how much? 12,900 to business purchase. General reserve the balancing for the business purchase 4 lakhs. You will have a general reserve debit balance. One lakh. Purchase consideration is 4 lakhs. Less share capital is how much? 2 lakhs. Excess how much is paid? 2 lakhs. Adjusted with general reserve of thin. Yellow? 50,000. Balance. Clear. Purchase consideration minus share capital 2 lakhs. The excess paid is how much? 2 lakhs. That is adjusted with which one? General reserve of thin 50,000. Balance gets adjusted with what? Debited to general reserve. Then let us pay the purchase consideration. What is the entry for purchase consideration? Account debtor. How much? 4 lakhs. To which one? Four lakhs. Then amalgamation expenses. Preliminary expenses account debtor to bank. How much?
1,000.
Balance sheet also we will do, but we will call it as sundry assets. We will not go for classified assets. Sundry assets put it will take just 2 minutes of time to complete balance sheet also. Take up the entries as of now. Balance sheet without a format, let us do. Share capital Already thick, how much is there? Plus purchase consideration.
4 lakhs.
30 lakhs then. Reserves and surplus, like general reserve of thick, how much? 1,80,000 minus debited in general entry 1,50,000. So how much will come? 30,000 will come in general reserve. Then profit and loss account of thick, how much? 20,000
5
plus thin
12,800.
total
83,402.
83,402. Then
Workman compensation
workman compensation
fund
fund plus
9,000.
then
Statutory
SPF will be a part of liability. That is part of liability. Resource lower. Less preliminary expenses. What is the preliminary expenses?
1,000.
So net amount will come in the outer column. Resource and surplus. See, general reserve was debited in the second entry. That debit. Which one next? What are the other liabilities? Creditors. Trade payable how much? Add both. 58,567 plus 30,456. 89,000? 0? Then staff provident fund. Staff provident fund how much? Add both. 14,200 upfront. Provision for tax. Add both. What is the provision for tax? 17,300. Examiner, please follow a proper format, not like this.
Sir, staff provident fund will come under long-term provision.
Correct. But if it is just a contribution outstanding at the end of there, it can be shown as other current liability also. Because staff provident fund, if it is maintained by the company, then okay. If it is maintained like PF is like EPF or like SPF, or if the amount is, for example, on 31st March, it will be like outstanding. Maybe you would have learned in income tax in the section 43B like statutory payment. Okay, so the PF obligation that is outstanding should be deposited before what? Due date of filing of return. As on 31st March, it should have been outstanding. That can be shown as a current liability also. We do not know what is it. Is it like contribution outstanding or contribution maintained or by the company? So normally it can be taken as a current liability also. Other current liability. We assume that it is a contribution to be made by the company at the end of the financial year.
Workman compensation fund, though, we have to, it's a kind of provision.
It's not a provision, it's a reserve, contingency reserve that we maintain. For example, if there is an accident or compensation only, we may use the fund, workman compensation fund. It's a reserve that is maintained. Otherwise, assume that the company is closed today. Assume that the company is wound up today. To whom the SPF will be paid, to whom the statutory provident fund will be paid, to the employees. To whom the workman compensation fund will be paid. If there is a claim by workman, you will pay them. Otherwise, it will be shareholders' funds. Sundry assets, add both. Total 11,93,569 plus 3,11,000 356 less preliminary expenses.
Sir, on the period, 25,502 plus 12,900, 38,402.
அப்படியோ less preliminary expense எவ்வளோ 3,000 1,000. Tallies. Preliminary expenses less பண்ணோம்லையா assetல. Cash payment made for preliminary expenses. Example, don't use sundry assets. Please write the full format of balance sheet. Entryல sundry assets use பண்ணக்கூடாது. Done? Shall we?
Yes, sir.
Question number we can finish up in 10 minutes of time. It's a simple question. Or other, or then the last question. Thick and thin. Okay, question number 3. TV Limited absorbed business of Radio Limited as a going concern on 30th June 1989. Okay, the balance sheet of two companies are given to you, TV Limited, Radio Limited. Okay. The purchase consideration was agreed at how much? 4 lakhs. Payable as to 2 lakhs in cash, of course. 16,000 at 12.5. Okay, the sale was completed. Then pass general entries to the books of what? TV Limited and prepare balance sheet after purchase. It will not take more than 2 minutes of time to complete this problem because purchase consideration is given. Purchase consideration is given. What is the purchase consideration? Start with the entry. Business purchase account date or to which account?
Liquidated.
4 lakhs. What are the assets to be taken over? Goodwill should not be taken. Goodwill should be a balancing. Selling company or assets பாருங்க. Last problem இருக்கும் purchasing company purchase பண்ணிடாதீங்க. Selling company order which one? Stock and debtors. Stock and which one? Debtors. Stock account debtor. Debtors account debit. What is the stock value?
260.
Debtors account debit. Two creditors, how much? Two creditors, how much? 1 lakh.
To bank.
To bank OD. To business purchase. Balancing for will be goodwill upon debt, or what is excess?
140,000.
Settle the consideration. Liquidator of Radio Limited account debt are 4 lakhs. To which one? To cash 2 lakhs.
To share capital.
No. Kadasi problem. To share capital 16,000 shares into
1,60,000.
10. To securities premium 40,000. Balance sheet you prepare. Okay. Balance sheet you can prepare. No. Okay. No. Balance sheet of which company? Share capital. How much is there with TV?
10 lakhs.
TV or issued capital?
10 lakhs.
10 lakhs plus
2 lakhs.
1,60,000. Then reserves and surplus. Reserves and surplus. PV 1,20,000 plus securities premium. 40,000 total 1 lakh. Trade payable TV how much? 20,000 plus radio. Radio 1 lakh irukkum. So total
1,20,000.
pay attention. Bank OD. Bank OD radio எடுத்து வந்திருக்கும். How much?
1 lakh.
Assets check பண்ணுங்க. What are the assets? Fixed assets. Only TV. Only TV how much?
11 lakh.
இல்லையே 6 lakhs. Fixed assets.
Only fixed.
Sir, bank OD 2 lakhs, sir.
பார்க்கலாம். We'll see. We'll adjust and see. Bank OD we'll see. Some more adjustments might come. We'll see. Fixed assets of TV will come then. Investments of TV. Investments of TV how much?
1,20,000.
Then inventory.
Star.
TV plus radio. What is the total?
3 lakh
3 lakh?
80.
80,000 then. How much?
4 lakh, sir.
அப்புறம் then cash balance alone let us check. What is the cash balance with TV?
1 lakh.
Minus purchase consideration எவ்வளவு pay பண்ணிருக்கோம்? 2 lakhs. அப்ப இங்க ஒரு ஓடி எவ்வளவு வரும்? 1 lakh plus radio OD. So totally it will be so this will not be 1 lakh, this will be 2 lakhs. ஏன் குறைய வருது? என்ன தப்பு பண்ணிருக்கோம்? Anything that we missed out? Very good. Goodwill, how much? With this, which chapter is over? Amalgamation is over. Now, what I request is, after learning this chapter, ensure that in 3 or 4 days, try to work out past exam questions, your study material problems, try to go through problem solutions, try to take up some thing and try to work out. That is most important. Practicing is most important because in every problem, we see some new adjustment. Okay, so there's a scope of new adjustment in such problems also. So work out past questions, your parent institute material, practice from that, then it's comfortable.